Zeno's paradoxes and Bitcoin. One reason I started the mining subsidy at 50 Bitcoins was to make it immediately clear how much remains mineable in the future. During the initial 4 years, the block subsidy was 50 BTC, accounting for 50% of total mining over that period. Thus, one can instantly see that 50% of the total supply remains mineable. For the next 4 years, the subsidy dropped to 25 BTC. During that period, 25% of the total 21 million BTC were mined, leaving another 25% remaining. Currently, *2019, the subsidy is 12.5 BTC. Over this period, 12.5% of the total supply has been mined, and likewise, 12.5% remains. In the next halving around 2020, the subsidy becomes 6.25 BTC. Over those 4 years, 6.25% will be mined, leaving 6.25% remaining. Adding up to 2020, 87.5% will have been mined, meaning 93.75% of the total supply has been mined by then. There is always enough Bitcoin, more than enough for the needs of all users. There's a common but mistaken belief that each halving causes the value of Bitcoin to double indefinitely. That can't continue forever, there simply isn't enough money in the world to sustain that. More importantly, by the time the next halving occurs, when the subsidy is 6.25 BTC, almost 90% of Bitcoin will have already been mined. If miners still rely heavily on subsidy rewards and cannot transition to earning from transaction fees, they risk being priced out of the market. Fortunately, we've demonstrated 2 GB block scaling on the Scaling Test Network, STN. We can expand beyond that to levels manageable by application developers and other development teams. Going beyond, scaling into terabyte-size blocks makes it possible to handle all of the world's transactions at safe and low-cost rates, surpassing PayPal, Visa, and MasterCard, and even cash. The true value of Bitcoin lies not in overthrowing governments or banks, but in the efficiency of Bitcoin itself.